In recent corporate news, Tata Steel has been making significant moves in restructuring its business portfolio. The company announced the successful merger of 5 of its strategic businesses, with 3 other mergers in advanced stages. This restructuring is in line with Tata Steel's long-term strategy to simplify its business operations and streamline its portfolio. The merger of 5 companies, including Tata Steel Mining Ltd, Tata Steel Long Products Ltd, SNT Mining Company Limited, the Tinplate Company of India Ltd, and Tata Metaliks Limited, was completed in record time, with the integration process already underway. These mergers aim to consolidate downstream operations and create synergies to enhance operational efficiency and customer satisfaction. Notably, Tata Steel Mining, with a turnover of 5,000 Indian rupees crore in FY23, was merged in September 2023, followed by Tata Steel Long Products, with a turnover of 7,464 Indian rupees crore in FY23, in November 2023. Subsequently, SNT Mining Company Limited, the Tinplate Company of India Ltd, and Tata Metaliks Limited, with turnovers of 3,983 Indian rupees crore, 3,260 Indian rupees crore, and 3,260 Indian rupees crore respectively in FY23, were merged in December 2023 and January/February 2024. These mergers are expected to drive growth in value-added segments by leveraging Tata Steel's extensive marketing and sales network. Additionally, they will facilitate raw material security, centralized procurement, inventory optimization, reduced logistics costs, and better facility utilization. While these mergers mark significant progress for Tata Steel, 3 other mergers are in advanced stages with respective jurisdictional company law tribunals. These mergers involve Bhubaneswar Power Private Limited, Ungul Energy Limited, and the Indian Steel and Wire Products Limited, and are expected to be completed by Q1 FY25, subject to regulatory approvals. However, one merger involving TRF Ltd was called off after improved business performance attributed to significant support from Tata Steel, including order placement and capital infusion. TRF Ltd specializes in turnkey material handling projects for infrastructure and industrial sectors, and with Tata Steel support, it has witnessed a turnaround in its performance. Overall, Tata Steel's restructuring efforts reflect its commitment to driving operational efficiency, enhancing shareholder value, and positioning itself for sustainable growth in the future. With a focus on consolidation and synergies, Tata Steel aims to strengthen its competitive position and capitalize on emerging opportunities in the market. Additionally, the decision to call off the proposed scheme of amalgamation between Tata Steel and TRF Ltd comes after a period of improved business performance for TRF Limited. This decision follows significant support from Tata Steel, including order placement and capital infusion, as well as TRF Ltd's own efforts in areas such as debtor collections, cost optimization, and asset management. The announcement of calling off the merger was accompanied by a surge in TRF's share price, which hit the 20% upper circuit at 327.70 Indian rupees. The boards of both Tata Steel and TRF Ltd approved the withdrawal of the scheme, with an application to withdraw it filed with the Kolkata bench of the National Company Law Tribunal, NCLT. A meeting of TRF Ltd's shareholders was convened on February 8 to consider the scheme as infructuous. This development underscores Tata Steel's commitment to evaluating and making strategic decisions that align with its long-term objectives and enhance shareholder value. By calling off the merger with TRF Ltd, Tata Steel acknowledges the improved performance of TRF Ltd and aims to support its continued growth and success. In conjunction with Tata Steel's strategic restructuring efforts, another significant development in the corporate landscape pertains to the merger dynamics between Tata Steel and TRF Limited. Initially proposed as part of Tata Steel's broader consolidation strategy in September 2022, the merger between Tata Steel and TRF Ltd faced challenges due to an unfavorable swap ratio. TRF shareholders were initially set to receive 17 shares of Tata Steel for every 10 shares of TRF Ltd, representing a substantial discount of 53% at the time of the announcement. However, subsequent market movements led to a narrowing of this discount to just 10% by February 6. Despite Tata Steel's efforts to support TRF Ltd through operational and financial assistance, including order placements and capital injections, the merger faced obstacles due to the unfavorable swap ratio. Consequently, Tata Steel announced the decision to call off the proposed merger with TRF Ltd, citing improved business performance and a turnaround in TRF Ltd's operations. This decision was reinforced by significant support from Tata Steel and TRF Ltd's independent efforts in areas such as debtor collections, cost optimization, and asset management. The decision to withdraw the merger proposal was ratified by the boards of both Tata Steel and TRF Ltd, with an application submitted to the Kolkata bench of the National Company Law Tribunal, NCLT, for formal approval. The market responded positively to this announcement, with TRF Ltd's share price surging by 20% to 327.70 Indian rupees, underscoring investor confidence in the company's independent growth trajectory. This strategic maneuver aligns with Tata Steel's overarching objective of simplifying its business portfolio and optimizing operational efficiencies across its subsidiaries. By acknowledging TRF Ltd's improved performance and deciding to maintain its independence, Tata Steel reinforces its commitment to fostering sustainable growth and value creation for its stakeholders. Looking ahead, Tata Steel remains focused on executing its long-term strategy while evaluating opportunities for strategic consolidation and synergistic partnerships. As the company continues to navigate evolving market dynamics and competitive pressures, its ability to make prudent strategic decisions will be instrumental in driving sustainable growth and delivering value to shareholders in the years to come. In summary, Tata Steel's recent corporate actions, including successful mergers and the decision to call off the merger with TRF Ltd, demonstrate its proactive approach to optimizing its business operations and driving sustainable growth. As Tata Steel continues to navigate dynamic market conditions, these strategic moves position the company for success and value creation in the future.